Hello and welcome to this video. Hey look, today I'm just going to be talking quickly about a topic that I actually did a while ago to a group in person. And I think with the way funding and the changes in banks and stuff at the moment, the way it's going, I just wanted to chuck it online and get people's opinion on it. So there's no financial advice in this. This is 100% what I'm seeing. And more than happy to get into more detail with people. But so what I'll put it is, how times have changed from a funding point of view. So when I started out as a grad in obviously another firm, when you're looking at companies and how they were funded from a bank point of view, overdrafts was super common. They never fundamentally make sense to me when people were consistently sitting in overdraft. If you're dipping in and out because of seasonality, etc., you totally get it from a cash flow point of view. But if you're always sitting in overdraft, a big thing that we were talking to clients about was, hold up, if you're a 30 grand overdraft all the time, let's chuck that in long-term debt, cheap money, pay it off, and then sit above the line, and it will decrease your interest costs significantly. So that was a big thing we did back in 2008. Cash flow loan lending was possible, especially in buying a new business. There was a few different ways that banks would do it, but fundamentally it was definitely an option. Second tier lending wasn't really a thing. Like, if you were talking about second tier lending, you probably shouldn't have got the loan, to be honest, back then. Well, that was definitely my take on it. And residential security was nice, but wasn't necessary. So if we jump forward to where we are now, it says 2021, but obviously we're in 2022 and I'm doing this. Now we talk what is an overdraft, to be perfectly honest. Not many clients have them. If they do, they have them for the purpose that they actually require in terms of the seasonality, whether it makes sense, or some clients have them as just a bit of backup more than anything. They're definitely not sitting in it constantly year on year, just basically building up fees, to be perfectly honest. So rather than having overdraft, people have been pushed towards things like the fully unsecured lenders, and obviously they have an associated increase in interest costs, which is quite interesting. And there's quite a few different players in that market, and there's some new players coming to that market. It makes me cringe a little bit, but to be honest, it definitely makes way more sense, especially in terms of the time it takes for banks to turn things around. If you're just needing something short term, yeah, it's going to ping you in terms of cost and interest, but what are you able to get out of the business if you have that cash flow there to allow you to do it? Asset finance is massive now, to be perfectly honest. When you're going and buying a vehicle, like I said, back in 2008, you go to the bank and they would choose speaking fund it. Now, the time and effort and the information they require, you're better off going to your likes of your MTFs. It's quick, it happens, boom, we're there. And the rates aren't that dissimilar, to be perfectly honest, depending on who you've got. Second tier lending, especially over the last couple of years, with the way property's gone, it's actually pretty normal. It's no longer high risk stuff, which is quite interesting. Cash flow lending is getting less and less likely from my point of view, unless you've got specific industries and some really good numbers to back it up and historic. But generally speaking, when you talk about cash flow lending, you're looking at cash flow lending to buy into a business. So that those historic numbers might relate to the business, but aren't used. Banks are a little bit nervy about it, so it's quite interesting. And basically, if you don't have residential security, quite often there's no point in going to the bank. Not ragging on the banks at all. That's just where they kind of sit. So if you've got residential security, they want it. If you don't have that, they're a little bit more hesitant. And therefore you're more likely to look at your asset finance, second tier or unsecured lending, obviously depending on what you're looking to do and what you're needing it for. So it has changed quite a bit, which is quite interesting. So I have been intrigued to see what's happened over the last wee while. So what does this all mean? And I think the key thing from my point of view is I think you've got to think about that what information you're supplying when you're getting that funding. I know I've spent a lot of time with a few clients over the last year that have been growing and looking at buying assets or going into new spots and stuff, and we've done a significant amount of work in terms of business plan, cash flows, and a full report basically for the bank to say, hey look, this is what we're looking at doing, this is who we are, this is what we're about. And I think that that's really important at the moment, because you used to have a relationship with your banker, I'll say, or your funding provider, whereas now we kind of need to make it so that they can pick up, look at this one document and kind of go, oh, actually I know who this is, because you don't have those 5, 10, 15 years worth of experience and relationship with that person to kind of go, actually they know who we are. So I think that's really key. Yes, obviously there is a cost associated in regards to pulling that information together and doing it, but if it allows you to achieve what you want to achieve, then I think that is key. The other thing is do you have a plan? Because you need one. Gone are the days where you can kind of go, well, hey look, I've been doing this the last 5 years. Last year will be the same as this year. This is cool. Like I was saying, you don't have that relationship with the funding provider anymore. So you need to actually document and basically say, hey look, we had a plan, we nailed it. And then we improved that plan and we nailed it again. We did this and we nailed it. So therefore, what we're talking about in terms of increasing assets or doing this or doing that, well, we've done this plan, which we've done multiple times before, and we've succeeded each time. So why wouldn't we succeed this time? Now, they'll take into consideration a number of different things, but once again, I think that is a very, very key thing to be putting in place. So if you're a business owner and you don't have a business plan, you're not doing cash flow forecasting, it's definitely something that you should consider. Even from an accountability point of view, that's what we're doing with a number of different clients, is kind of go, well, hey look, this is what we said we're going to do. Why aren't we doing it? What has changed? We talked about this 6 months ago. You can't all of a sudden change unless we have a conversation about it, because this is the path we're on. This is why we're on the path. This is how it works. So very, very interesting and cool stuff from my point of view, but you need to get that buy-in from the clients or the business owners as well. Now, a lot of people are saying, man, this is a bit of overkill. You could say that about health and safety and a whole lot of documents you've got to do as well. But when you're a business owner, you need to be thinking about this. And people get a little bit frustrated when you go for funding and the bank is saying no. I think you've got to actually look back and, like I said, look at what you're supplying. And being a third party, would an investor give you the information based on what you've supplied on? And if the answer is no, well, why should the bank? If you're going to go, oh, look, I'm just chucking a few bits of information to them, hoping to get 100 grand. Well, if you gave it to a third party, if you came in and gave it to your accountant, do you think they'd give it to you? Probably not. Well, why should the bank? Spend the time, put this plan in place, spend a little bit of money to actually put some structure and framework around your business. Talk about where you want to go. It could be a 1, 2, 3, 5 year gig in terms of doing this. So if you're talking about in 3 years' time, I want to be here, then let's sit down, let's plan that, let's talk about it, let's see what steps we need to do, what roadblocks are there. Talk about the different options and how that works. It's very, very key. So, like I said, just something that I threw together for a group of men. It was a while ago now, it's probably 18 months ago, but I still think it's relevant today. And I think it's really, really interesting, and more business owners need to be thinking about it in terms of what funding is out there, why it's difficult to get funding. A lot of people just think the bank should give me the money. That's not the answer. What information are we giving to the bank? What plan do we have in place? So, hey, look, I'd love to hear your thoughts on it. So just have a think about it. And like I said, reach out. If you want to do a business plan, you want to do this, let us know. I'm more than happy to talk about it and see what we can pull together for you. Thanks for listening.